You keep marking fair value gaps like they're magic zones, and the chart keeps proving you wrong. The reason is simple. The way most traders analyze FVGs is shallow, outdated, and built on guesswork. Today, I'm giving you FVG 2.0, the version that actually matches what price is doing on the chart. No hype, just real structure, real intention, and real chart behavior. Let's get into it. You're losing on FVGs not because the concept is flawed, it's because you're staring at gaps without reading the chart that created them. You see an empty space between candles and think, that's my entry. Meanwhile, the chart is screaming at you that the context is wrong, the structure is weak, and the intention isn't aligned. If you don't understand why the FVG was formed, the market has no reason to respect it. Look at any clean displacement on your chart. Before the imbalance forms, something happens. A high or low gets taken, a structure shifts, or momentum transitions. That moment, the moment the chart flips its intention, is the origin of FVG 2.0. The gap is just the footprint of aggression. But retail stares at the footprint and ignores the path leading up to it. That's why you keep getting trapped. Think about your last chart where you bought or sold at an imbalance. Did you check what price took out right before the displacement? Did you look at how clean or sloppy the candles were? Did you notice whether the chart shifted from compression to expansion, or were you too focused on the empty space? This is where traders get punished, because they're trading the picture, not the behavior. Here's the real chart logic. An imbalance only matters when it shows up in a sequence. Liquidity grab, displacement, imbalance, and follow-through. When you see that sequence, the chart is telling you its intention. But if there's a gap appearing randomly in a choppy, indecisive market, that's not a signal, that's noise. And you get wrecked because you treat noise like structure. Let's walk through a chart scenario in your mind. Picture price sweeping a previous range. You see those wicks piercing above or below. That's liquidity being collected. Immediately after, the candles flip direction with force. No hesitation, bodies expanding, wicks shrinking. That's displacement. That displacement creates the imbalance. The chart is leaving a footprint because it didn't have time to trade through that zone. Now pause there. That gap is not the setup. The sequence is the setup. But here's where retail blows it. The moment price comes back into the gap, they jump in instantly. No patience. No reading the behavior of the return. The return itself is part of the setup. If the chart drifts back with slow, weak candles, respecting the structure, that shows alignment. If the return slices through the gap like butter, the imbalance was never meaningful. The chart never intended to respect it. That's FVG 2.0. You are reading intention directly from candle behavior, not hoping the gap holds. Think about your last failed setup. You marked an imbalance, price came back, and instead of reacting, it blew straight through. That's not manipulation. That's you ignoring the story the chart was telling. Drop a comment if you've seen that happen, because every new trader experiences it over and over until they finally understand this. FVG 2.0 is all about chart interpretation. Watch the way price approaches the imbalance. Does it return after clearing opposing liquidity? Does it return after forming a micro shift in structure? Does the candle flow slow down, tighten, and respect the footprint? Or does it charge back with the same aggression it used to create the gap? That one detail alone will save you from half your losses. This is where discipline separates professionals from gamblers. You can't jump into an imbalance like it's a cheat code. You wait for the chart to confirm its intention. You wait for alignment. You wait for clean delivery. That's how you trade FVG 2.0. Not by drawing boxes, but by reading transitions, candles, and the way price reacts to its own footprints. The chart always shows what it wants to complete. Every imbalance hints at unfinished business, but not all unfinished business is worth trading. If the chart isn't showing urgency, respect, or alignment, you're not trading with the market. You're trading against the intention behind it. The core of FVG 2.0 is this. You don't trade the imbalance. You trade the chart behavior that created it and the behavior that returns to it. Most traders fail because they mark gaps like they're automatic signals, ignoring structure, ignoring liquidity, and ignoring candle delivery. But when you combine the sequence, sweep, displacement, imbalance, return, intention, you finally get an edge built on logic, not hope.